Now we come to the show that I get asked a lot about, which is our top 3 ideas for individual investors to focus on before you make your investment decisions. Number 1, tariff details to be unveiled today. As I said off the top of the show, President Trump's Liberation Day. Don't know what they're being liberated from, but a lot of people get it confused with Independence Day. A great movie, but I'm not so sure they're the same thing. We'll talk about tariffs and what is perhaps going to happen at 4 p.m. During his announcement in the Rose Garden, I believe, at the White House. Jobs and inflation updates or data coming out. We're going to get jobs data this Friday out of Canada and the U.S., and we're going to get inflation data out of the U.S., I believe, mid next week. We're going to get PPI, CPI, consumer products. We're going to find out if what the inflation situation looks like. It's been ticking higher gradually, but with the tariffs coming, and tariffs are already implemented in some areas of the economy, is this a cause for concern? Is inflation rising? Our third point, should investors be looking to big tech at this time? And I put this there because if you look at the Magnificent Seven, and everybody just all of it right away moves to the Mag 7, and believe me, there are a lot more tech stocks than just the top 7 names that we talk about often. But the Mag 7 is down double digits this year as a group. I think only Meta is higher for the year. And if you look at the other 493 stocks on the S&P, they're basically flat for the year. Maybe I think even up a fraction. So you can clearly see that it's been tech and the Mag 7 that has been hit. So is this an opportunity? We'll talk about that as well. So let's move on to our first topic, the tariffs. And what's going to happen, I guess, at 4 p.m. this afternoon or slightly after 4 p.m. They're going to unveil, the president that is going to unveil his reciprocal tariffs. So whatever a country has as tariffs or VAT tax or anything like that, that they put on goods, American goods coming into their country, well, the U.S. is now going to reciprocate in some format. We're just not sure yet, but there's a talk that it might be just a straight 20% on anything coming into the U.S. It might be more detailed, country by country, or it might be even more detailed than that, sectors within countries, certain like lumber or dairy or energy. They may all have different tariffs put on them. A lot of work, I'm sure, for Howard Lutnick, Secretary of Trade, and I'm sure he's quite a busy guy right now, trying to represent what President Trump wants to do. Our first chart here shows Trump's tariff timeline. We've gone through this, so we'll go through it again very quickly. 25% tariffs on Mexico and Canada on non-compliance USMCA. This is the left side of our chart. This is already in effect. 10% on Canadian energy, 25% on steel and aluminum, and 20% on all Chinese imports. Scheduled to go through today, April 2nd, 25% on all imports from any country buying Venezuelan oil. Now, this is a great one because the United States is also perhaps hinting, or they've said they might do the same thing with if the Russia-Ukraine situation doesn't, if they don't get a ceasefire and the U.S. cannot come to some sort of resolution, they're thinking about perhaps doing the same thing with Russian oil to force Russia to come to the table. So that's interesting to consider. We're going to have reciprocal tariffs, as I said today. Canada and Mexico tariff pause lifts. This is also interesting. We talk about stacking. Well, will the pause on Canada and Mexico tariffs, will that end today? And so everything will be tariffed. On top of that, you have steel and aluminum tariffs. You have energy tariffs on top of that. So you get 25 on top of 25, maybe on top of 10. It just keeps growing and growing and growing. So we'll hopefully know more about that. 25% on autos. A lot of issues there. As we know, automotive parts. Looks like they've delayed that. So parts, tariff on parts won't come in until beginning of May, 25%. I think the problem with that right now is that for the president, for the U.S., they're finding it difficult on how to tariff parts because, as we know, one part can cross the border between Canada and the U.S. 6, 8, 10 times before it actually goes into a car. So a big problem, I think, to figure that out. And obviously, with all this information, there's no wonder that stocks are falling. And the biggest losses have come in the Nasdaq, in the tech area. We know the S&P 500, we showed that chart off the top. S&P 500 is basically down about 4.5% year to date, down about 8.5% from its all-time high reached end of January, mid-Feb. The Nasdaq down 9.5% from Jan 1, down about 13.5% from its all-time high. And the TSX, which has a lot of gold stock on it, and we know gold, we're going to talk about gold a little later, but gold has helped keep the markets high in Toronto. And we actually see that the TSX for the year is fractionally higher, but down about 3% from its all-time high. So markets have been able to weather the storm. Individual stocks, not so much. We have our next chart here. Top companies see sharp market value declines in the first quarter. And I'll read out some of the stocks. Berkshire Hathaway is actually showing an increase, but then you get Meta Platforms, which is basically flat. Saudi Aramco, oil companies down about 4.5%. But then you get into the big tech names. Microsoft down 11, Apple down more than 11, Amazon 13, Alphabet, or formerly Google, 18. Nvidia stock, largest chip maker in the world, talked about it on our show many times. They're down about 19-20% for the first quarter. Broadcom, almost 28%. And Tesla. Everybody wants to know about Tesla and Elon Musk. Just heard this morning that the president announced that Elon Musk will go back to just being a CEO at some point in the near term, that he is no longer going to be working for the government. I guess it's because his stock is down almost 36% from the start of this year. So a lot to parse through. The tariffs, we need to understand what's going on. Hopefully the announcements at 4 p.m. this afternoon go a long way to give us some clarity and certainty into what's happening, and that will hopefully help the markets. Second point that I want investors to consider before you make your investment decisions over the next couple of weeks is the jobs data, inflation data coming out over, jobs will come out on Friday, Canada and the US. Our first chart is a chart about US jobs. You can see US jobs have dropped from the highs of late last year. Jan, Feb numbers were okay. They show, I'd say, fairly good numbers, but not nearly as high as what we saw at the end of last year. If we see jobs data, jobs numbers really fall for the month of March, that could bring some fear to the market. So I think you want that Goldilocks scenario, not too high so that we have inflation scares, but not too low so that we have growth scares out of the US. And lately, I think the growth scares have taken over from the inflation scares. I think everyone is in agreement. If we can somehow not tariff everything going into the US and Canada from each other, that will definitely go a long way to keeping inflation down. Jobs numbers, our next chart, we could see February, we basically had next to no growth of jobs. We can turn the page over there. So we have job, there it is, Canadian employment change. February, basically flat. We had January numbers, a lot further down, a lot less than December. Still higher than November, October, September, and August. So still pretty good numbers for the month of January, but February was a pretty big runoff. Will we continue to see jobs, I guess, stagnant or no growth at all? Our next chart, we've had this chart many times. U.S. Consumer Price Index, as I said, we're going to get inflation data in roughly about a week's time. And what that's going to tell us right now, we're seeing inflation as you see it here, 3.1 on core, 2.8 on headline. If we go to our next chart, PPI, which is wholesale prices, you could see that we were starting to see some ticks down on a monthly basis, which is our first chart. Looks like on a 12-month basis, our second chart, chart 2, again, still coming down slightly. So that's a good thing for the Federal Reserve. And I'm sure central banks, Bank of Canada would like to see that as well. So if we do get these reciprocal tariffs, and if they are more severe than we're hoping for, everyone's going to look at these numbers, the PPI, the CPI, the PCE, personal consumptions and expenditures numbers. These are the data that central banks, the preferred data by the Fed, the PCE, what we're going to look at to see if inflation is becoming an issue, and definitely something that we need to focus on before we make your investment decisions. Our third and last point, well, this is the idea of, should we go back to tech? Should we go back to some of the Magnificent Seven? There they are. I would say tech is still the biggest, by far, component of the S&P 500, largest sector of the market in general, the economy, fastest growing. So I think when you see this sector down by quite a bit, and it has been the biggest decline, as I said, the Nasdaq's down the most, tech is down the most. Yes, I think you can circle back to some of these tech names. Now, I don't want you to extremely overweight them. I think you can be market weight. And so basically, if the market is 40% tech in the S&P 500, should you have 40% tech in your portfolio? Well, I'm not so sure, but I think you should have a fairly good size or a nice size component in your portfolio. We have a few charts here showing you the decline of some of the Mag 7 stocks and one other stock. The first one is Meta. You can see the chart here in Meta. Once a $740 stock. Today, 580, 590. Unbelievable decline. Broadcom, not on our list of the Mag 7, but maybe the Super 8 or the Batman stocks, whatever you want to call them. Batman, we had that on our show a few shows ago. Broadcom used to be a $250 stock. Today, under $170 for one of the best companies in the world. It reached the $1 trillion mark, no longer a $1 trillion market cap, just growing in the AI space. Custom chips, etc. Unbelievable, and competitor in some cases to NVIDIA. Our next chart is Microsoft. Once a $460 stock, today just above $380. Again, Microsoft, I've always said, in my opinion, the best company in the world. They have business in all areas of growth, whether it's cloud, AI, software, hardware, their suite of office products. They're in gaming, social media with their LinkedIn product. They're just everywhere. And so to see a stock like this fall as much as it has, could this be an opportunity for individual investors? I think so, for the right investor that can handle the volatility. Alphabet, our next stock, once a $207 stock, under $160 in the last, well, I guess in the first quarter of this year. Unbelievable decline as well. And lastly, our favorite stock, we show this stock all the time, Amazon. Amazon is probably one of the most diverse companies. They have their hand in everything from groceries to pharma to just selling everything to AWS, which is their cloud business. They're in AI with their AI products. Amazon is truly a magnificent and well-diversified company. This stock was once a $242 stock. Today it trades at about $192 when this chart was taken. So these are the ideas. And as I said, I'm not sure you want to own all of them. Maybe you own just a couple. If you already own them, maybe you want to add to them. You want to stay diversified. So I'm not saying to pile into tech only. You have to stay diversified. But to me, tech right now is something you could circle back to because I think it is undervalued in many of these names that I've already shown you, plus many others. So looking at tech, keeping obviously an ear on what's going on with the tariffs at 4 o'clock this afternoon, and of course, jobs data on Friday and inflation data next week. These are all the things that I think individual investors should be focusing on.